So we had lower highs, lower lows. Short term was higher lows, higher highs, and then the sellers coming in. So I shorted around here, remember? And we had the fibs from memory around those levels, 126.30, I think 125.83, 125.45. And you actually said, Anthony, it's going to be a big stretch for it to touch there. So we went in short there. Now this was maybe the third time that we did such a trade on the cross pairs. And we made a little rule that if I break a significant downtrend line, a downtrend line on the lower time frames, I'm going to close the position because overall it was still an uptrend on the daily chart in the higher time frame. So and then this happened in the following hour. So once it broke that little downtrend line, I closed that position considering it was in overall uptrend. So obviously buyers, bulls come back in and higher prices were going to be met, and that's exactly what happened. So let's just click through hour by hour. So that was about 9 o'clock, 10 o'clock. So it was very close to the stop, which was just spread, this high plus the spread, so 127.70 or so. So 127. So it was about 20 odd pips away. So it was looking good that I made the right decision here. But as we click along, so 11 o'clock, and then this happened. So at midnight, my time, she dropped, and she dropped quite violently. And obviously continuation with sellers in control, and it took out all the targets. And then it retraced during the day and obviously continued further. So my question to Ray was, if previously on the end or cross pair trades, we were closing based on a break of downtrend lines because overtrend was up one, why was this one different? Why did this work? Why did Ray, perhaps I could say, felt an intuition that this one was going to work? I mean, why was this one any different? Why did this work? And just from my own learning, I'm trying to ascertain that, because the only thing I can think of from my notes was that it was probably a significant supply on a higher time frame. There's nothing different compared to this trade that we did in the past. The only difference is that this one worked rather than taking out the stop loss initially set.
All right, great question. Okay, here we go. So from my notes on what you guys have done, right, and that's why I needed to ask what the stop loss was. So it stated there that Euro Yen short dated February the 6th, 2013 on my notes. Short at 126.58. Target points 126.28, 125.85, 125.41.
Yeah.
And the stop loss was 127.69 plus the spread. So 127.69 was the high. It probably wasn't 169. It should have been the 127.72 unless it was the asking price, right? Or the bid. And,
correct.
Yeah, so 127.69 plus the spread. And the reason why I had to ask that is because I automatically know that if you're saying 127.69, that is now basing on the bigger time frame of the daily chart. So if you go to the daily chart, please. So during the time was on that red bar, probably like forming on that evening star, right? February the 6th.
Correct.
All right. So, and this is where now it's very important. If you're saying that the stop will be at 120.69 plus the spread, and you're saying that the odds and probability that it may drop to 126.28, 125.85 is highly probable, then that would be pretty much an overnight trade, or at least a swing trade, pretty much 2 days from the initial point of selling. Right? Because on what you bought it, or you shorted at 126.58, it was almost pretty much a good price as a form of a correction part, I believe. Now, if that would have been the case, where if the plan that you dictated is going to say, well, if it breaks out on that primary or that downtrend, then I am out. Then technically speaking, the stop won't be at 127.69. It would be on the high of that blue bar, where that yellow circle that you put in it, right?
Yep.
Right. So see how the plan basically has changed. If you're looking at a 1 hourly chart, the high is at 126.85 plus the spread, not going to be 121.69 plus the spread. Does that make sense?
Yeah.
Yeah. Because if you're stating 120.69, then you're not letting it ride, because that's what the dictated stop is going to be. Unless as part of your if and then statement is stating, well, I need to make this room. I'm happy to lose 127.69, but if it doesn't want to, then so be it, right? So it is a part of the plan of the execution is that, okay, I'm going to look into this. I know there's a report bound to happen. I'm going to put the stop at 127.69, or if it breaks through that downtrend, then I'm going to go long into that and then go up to C and where it can dictate. Because if we're looking at a 1 hour chart, this is pretty much momentum trading, correct? Yeah, because we're finding the momentum of it. So it didn't drop. It rebounded to the upside. So if you're looking now into your screen, then that means that once it breaks, you're out, cutting your profits short, and then you're going long, technically speaking, until you reach 127.50, created that doji, red doji, you're out, and you're going to short at that better price. So that's pretty much the answer that basically going to give you. Because if you really look into in the past as well, like our pound yen, the plan is mainly on the daily or on the 4 hourly. So the 4 hourly that what we looked on was basically, okay, it broke through there, it doesn't want to play, then we go long, right? But this one is looking at the hourly. So they do change. The change of the intent that's why the intent is actually very, very important. Okay, I hope that answered your question, JP.
So for future reference, when we're, like all the yen trades that we did, I know the runs that we formulated that playing where it broke the downtrend line. So when I got in here, there should have been I should have either corrected from closing it, but then possibly re-entered it. Is that what you're saying? Because it didn't violate that stop, or just take the stop on the chin?
Correct. So if you're stating to yourself, well, the stop is at 127.69 because there, probability that it's not going to go to 126.69, it's highly probable. Leave it. Yeah. But if you're looking at a 1 hourly chart, then it's now micromanaging the account, right? It's considered as micromanaging because you didn't let it go to where you're supposed to in terms of your stop is supposed to go.
Oh, hang on. I'm playing devil's advocate here. It was an overall uptrend, buys in control.
Correct.
So would the assumption being when it broke here that all in highly probable that it's going to continue to the upside because not only it's buys, because the overall trend on the high time frames is all up. So it was going to continue up further.
Not as yet, not until the last high will be violated though.
This high here.
Yeah. Because if you look on the daily, on a daily chart, now if you look on the daily chart, yes, it is an uptrend. However, in order for an uptrend to be formed is by violating the higher high. But we're only going to know that once the higher high will be broken on the daily chart. It could happen any time in the day within 24 hours.
Yeah.
But we'll only get a proper confirmation 1 minute prior to closing. or during closing.
Yep.
Right, so yes, overall it is an uptrend, but in order for the high to be violated is for the high to be broken. So if we go to the 1 hour chart, did the high get violated? No, not yet.
No, it did not. No.
Exactly.
Okay, hang on a sec.
Yeah, the only thing that got violated was the short-term downtrend.
Correct.
Right.
So if I had to replay this game again, I would, bear with me while I work. So I'll have to stop there, right? Hang on a sec. So I'll put the stop there for future. Next, if I play this game tomorrow, I would put the stop there plus the spread. Now I would take the hit on that, but I would go long at 27.70 because that would be a confirmation of continuation of the uptrend.
To be honest, your trend line is actually wrong.
This one here?
Yes. Because that trend line already got violated ages ago.
Correct.
Right, so create a higher high, higher low, next one will be higher high, so higher high, higher low, higher high. Technically speaking, from higher high, higher low, and then higher high to break 127.71. Yeah.
So in theory then, this trade should not have been executed then, as it broke the downtrend line.
Correct.
Correct. Yeah. So so the entry from the start was incorrect anyway. Okay, so let me ask the question to myself out again. If I had to play this game again, I would not enter here at 126.58, for example. Perhaps the best bet would be something of a break of this downtrend line.
Yes, or the best bet is to go long on that demand because it's an uptrend and got violated. It already got broken.
So so because it was an overall uptrend, that's the entry to go long.
Correct.
Gotcha.
And then a much better price of shorting is at 127, close to 127.50. But the question is, if you're there and you're looking at your computer, then yes. But what happens if you're not looking at your computer? Then put a mechanical order.
Correct.
And Anthony, questions, or did you learn anything from that?
No questions.
So he decided to short at the yellow circle at 126.50.
This was that trade, Anthony. Remember when you asked me that you said it's going to be a bit of a stretch for it to reach all these fib lines? Do you remember that? And we went short at that point.
Wednesday last week, Anthony.
Wednesday.
Yeah, you were there. Wednesday, our time, Thursday, their time.
Remember I was leading the presentation?
Yeah.
That was the day that we did this.
Let's see.
So look good on the daily with the doji formation, but in the lower time frames, like you didn't execute the multiple time frame analysis correctly. Because as Ray just pointed out, this trend line I actually put incorrectly at that point. And it should have been there, and as you can see it broke through that very nicely with the bulls in charge, nice level of demand going up. So I should have actually gone long at this point, because it's an overall uptrend with buyers in control, level of demand. I actually went short at the wrong time. So what I should have done, if I was going to go short, because it failed to take it this high, I would have been short at that point, like 27, or a break of that uptrend from there. So that's what should have been done.
Do you remember that, Anthony?
I kind of do, but not entirely.
Gotcha.
So for my learning, so obviously the trend lines need to be correct and meticulous. I need to read demand and supply a little bit better. and also the overall trend was up. So I've got to match the intent with what's happening in the actual screen itself. See, it's got buyers, demand, breaking trend lines up.
Nice. All right, Anne, any on your end, challenges, issues?
No, I don't have any at the moment. Okay.
Cool.
Oh, the screen. Can I have another one?
Go for it.
Yeah. From my notes with you presenting, Ray, I think it was on Saturday, my time.
Yep.
It was the pound dollar. One of your comments was more to the short side. So
Yes.
it was like this. And
Yes.
so I'm looking at this, and it's got something like that. So we've got a break of a downtrend line here. So we had a nice M2 formation, buyers took over, breaking the 8 and 10, breaking the downtrend line. And you said this is more shorting. And lo and behold, it did.
Yes.
So I'm sort of wondering, how did you read that to be more to the downside rather than a possible M3 more to the long side, or a change of trend from this M2 plus a break of the downtrend line? How did you read that?
The $1,000,000 question. All right. I'll go to the bigger time frame, please.
Because you seem to have that crystal ball, mate, for tomorrow's
It's not basically convincing enough in order for the price basically to drop. Even though, if you really look at the weekly, yes, there's 157 in terms of demand, but is it really good support? Because if you look in the past, everything is like bubbly, right? It's really, there's nothing supporting it really properly. So if you really look at it, where is the price with much stronger support?
Okay, let's put a line on this so we all can see it properly. So that's all bubbly, as you said. So around that area.
Yeah, pretty much around there. Where else? Where else do you think? 155.
Definite.
Yeah.
Yeah, probably around there.
Nice. Okay, now look also on the monthly chart.
Okay.
If we look at last month, look how violent that is last month, right? So that the performance of the pound last week was just a minor correction. And that's what happens now with M2 from a Morningstar perspective. The Morningstar can only perform 1 or 2 days, pretty much. 2 to 3 days maximum in terms of the correction. Sometimes you can just do doji, and then it can just go flat line. But the odds and probability of it dropping is highly probable because it has to follow the momentum of the bigger time frame. Bigger time frame is always going to be the king. So January, look at the violent move of January. It's pretty big, right? It didn't want to perform. We have lower lows, lower highs, and lower supply. And we know for a fact that it's just been channeling between 2 points. Approximately around 153 all the way to probably 163 since 2011. It began in 2010, mid of 2010, to break out on that 153. Because prior to that, when that big downturn of the 2007, 2008, then all of a sudden it's settling down. So at the moment, they have to fill in within the blanks, those two midpoints. Odds and probability that the price can go to 154 is more than likely. It needs to stabilize itself first before it can continue to go up, right? So to read bigger time frame is important sometimes when you're looking into a trade on the smaller time frame on the daily chart, so if you can please go back to the daily chart, once it reaches to that point where the correction happens, and if we actually look into it, what is the trend? Is a downtrend.
Correct.
What is really the probability that it can go beyond the high level right there on the supply? I mean, it's very, very slim. Yes, the odds it can go, but the probability for the wave to come back down is highly probable. Now, the only way for this to come back up, another part is like if they're retesting the demand level around that area in the next few days and the low doesn't want to break the new low, then that's where we're going to go long. Other than that, nothing. It's nothing dictating that this is going to come back up as yet. Why? Because it's weak. Last week I wasn't convinced, even though it did do M2, it's not convincing enough. A better way of looking M2 is when it is in a level of demand and it's an uptrend. So if we look on the US dollar against the CAD, the US dollar against the CAD has a bigger probability, and that's why I chose the CAD compared to the pound against the US dollar, is because of the probability of it being higher than the pound. And the reason, the dollar against the CAD is in an uptrend, short-term uptrend. So if you can see through there, higher highs, higher lows, next one, technically speaking, should be higher high. Hence, actually, I did close the position today is because of reaching the level of supply. Now, if it breaks through 101, then we can re-enter again. Other than that, if it doesn't want to break through there and it comes back down, then we will go back in again. But in terms of probabilities, that is a stronger probability because of the trend. A change of trend of 2000 since 2000, actually September 21 or September of last year to where we are at, it is in an uptrend. So that's the difference between the two. Now if you look at the bigger time frame, looking at the weekly and also, like I say, on the weekly, notice how last week or the week prior to that basically retraced to a point on a good level of demand to create a higher low before a new higher high, technically speaking, should form. So that's why there's the difference between 2 points. And if you notice as well, we stated on the euro yen, same with the euro yen, it's an M2, but it's an uptrend. So we have to be careful with taking in terms of profits. You know, short-term profits, that is it. It is a much better to create or to buy, or sorry, short, if there's a new change of trend to the downside. But other than that, it's just too strong, right? So 3 days and all of a sudden it came back up. What we want to see here, though, is that if 127.50 doesn't want to break, because it's already, if it's testing like 3 times, on the 3rd time it will go 127.50, but doesn't want to go beyond that, then we'll be shorting that like there's no tomorrow. Because when price reaches to a certain point, you know, it's like a bubble. It will keep on expand, decrease, and then expand, kind of retest certain price, and boom, that's when it's going to explode. So is it ready to explode? Maybe not yet. We're going to, maybe in the next few days will be a time to short the euro yen, the pound yen, the dollar yen. So, but for now, we cannot go against the trend. So there's a difference between the two. But going back to the pound dollar, on a downtrend, that is it. It's 1 day maximum, right? 2 days perhaps. You know, but I don't know whether they had news yesterday, but it just tanked. It just failed. So whoever was buying Friday, they got caught, and basically they're done. They lose again. Actually, a guy called me today and he's saying, like, I don't know what's going on. I don't know if it's me. I don't know if it's my system. Every time I go in, I get taken out. well, I said, you have different factors in there that I need to look at. Maybe it's the system. Maybe it's you. It could be both. So, if people cannot read and they're just following systems, and that is the problem too. If they cannot read, they'll be in trouble. So yeah, that's a trick to it. Bigger time frame. If you're in doubt, go to the bigger time frame. What's it really telling you? And the risk is smaller by shorting. The probability of you winning on the downtrend always is going to be higher. I think this is the mistake basically on my account too. Not last month, it was December. We're already on the positive side, but I'm going against the pound against the yen. And it's like, hello, what do you think you're doing? Because we're just going against it. We're just fighting against it. But, the bigger time frame is saying it's bulls. The bull's in control. The bull's in control.
Yeah.
How many times have you heard people are saying, oh, it's gonna retrace pretty soon. It's gonna retrace pretty soon. No, it's not. It's not gonna retrace because the bigger time frame is saying the market is gonna go up. Right, so, and we've been very bullish, and technically speaking, we're right in terms of our analysis. But what makes it fail sometimes is still going to be our beliefs. One is maybe perhaps we've heard it from somebody else that it's gonna fail. It's gonna fail. Nobody knows the actual answer except you or you alone, really, technically speaking. So yeah, that is my question to you, or my answer back to you for the pound against the dollar. All right, let's talk then about. Is there anything? Sorry, before we go to that, JP, anything else? Because you have a lot of good questions here.
No. Now it's trying to put what you've just said into practice now.
Cool. Yeah, so basically all of our trades went through the good side: dollar Swiss, pound Swiss, euro dollar. Actually, no, the euro dollar is what I'm looking at. I'm looking at from the 6th. Yeah, euro dollar, dollar yen. Actually, we said we wait and keep an eye on it, and lucky we didn't because it went further. Aussie USD was hold, and notice Aussie USD dollar basically dropped. Pound Swiss was a hold. Dollar CAD was a hold. Dollar Swiss was a hold. Euro yen is also waiting, just waiting for a correction actually. So even better for us on the euro yen, because we stated that it dropped too massively. We need to wait for the correction to re-enter, and hence I believe there's a probability much this one better of shorting, and it reduced now our risk from 125 current price 125.85 all the way to 127, say approximately like 200 pips. Before it was 300 odd something pips or more. 23, 4, 23, 24, 25, 26, yeah, 400 pips. So it's pretty good. So pretty much we're halfway already there. But I'm not convinced that the market can continue to go further up, to be honest. We have actually an M2 formation right now on a 4-hour chart. That's an M2 right there. Sweet, yes. Okay, let's talk then about what worked well in your trading then last week. Let's start from you, Anthony. Actually, no, well, yeah, we'll start with Anthony.
What worked well was I was willing to be patient with the dollar CAD, and it took a really long time for it to get to where I wanted to go. So that worked well. And then trading the lower time frames, I'm finding that I think I might be a little too impatient for the daily charts. But yeah, trading the lower time frames worked really well for me last week, and I did a couple trades earlier on Sunday, and they worked out, so that's been going very well for me.
Cool. Because your profile, I don't know whether you're really a swing trader, to be honest. I mean, you have the patience, which is great. That's why I think it's imperative to have 2 different accounts or even 3 different accounts. One you're looking at it to is basically to give you a bit of a tickle, meaning, a bit of the adrenaline rush, and that's why shorter time frame is great to get some quick cash here and there. Longer time frame, yeah, definitely patience is the key. Cool, excellent, nice. JP, you're in. What worked well for you last week?
Quite simply taking action, but taking action with calculated risk. It was well defined, and I had the position sizes sorted out, and everything sort of flowed. I mean, that reflected quite well in the CAD.
Nice, perfect. Anne, your turn.
Mine was taking action as well, and also having a better plan. Like, for example, I put my trade up in pulse for the pound dollar. So I went in long for the method 2, M1, but I knew that it was only going to be a 1 or 2 day trade. However, anything can happen as well. So that's why I planned it to have just a 1% tester for the long, and if it went to the long side, then I would have added on as an average, because I want to improve my averaging to the direction that I want it to go. And also moving the stop. So instead of putting my stop where my original stop is, which is a loss, I moved it so it's actually a win. So in the end, I won, because I followed my plan and I was happy with it.
All right, excellent. Okay, good. Anything else then? So what's the plan then for this week in order for us to redo our success from last week for this week? What can we do this week?
I'd like to start looking at the 4-hour time frame and the 1-hour time frame a little bit more closely.
Gotcha. Okay, looking at 4-hour more closely. JP, how about your end?
Oh, I'd probably go the other way. So let's look at the bigger time frame to see where the heavy weight's going to be moving for each individual pair, and just be patient and just try and get our entries correct. I mean, the entries are really good, so let's keep on doing that.
Nice. And?
Just doing the same thing I've been doing over the past few months. Just really being patient and taking action, and I always look at the bigger time frame for direction and stuff like that, and also try to teach myself to day trade, because the lower time frames, there's opportunities with day trade, especially like, for example, the X pairs, where they retrace only for a certain period, but they still keep creating higher highs, higher lows, and taking that into consideration, taking profits shorter. And then when the reversal comes in, we get the short or that big correction, then I'll take that opportunity as well. But trying to also catch the wave within the smaller waves within the bigger waves.
Nice, cool. All right, my end there, from what I can see from everybody, like in terms of the way how we're doing things, I believe for the first week of Feb. At one point there was no trade, and we kept waiting, and then out of nowhere, bam! All basically came in. Hence, if you look at the winning, it's basically 100%. Biggest win was that Euro Yen that everybody looked at. It was at 220 pips. It was awesome. Even though these are all recommendations, yet not everything here though is being inputted in terms of my end as well. I didn't go into the Euro Yen because I still had the dollar Swiss and the dollar CAD. But from what you guys have analyzed, so I'm putting everything here, what the recommended trades that everybody's looking at, and we're looking in terms of performance. And if you notice here, M1, M2, right, M1 and M3 on the dollar Swiss. This is also something I would like to share with you later on, is that how can you play a game in trading where you're in a trade, one is losing, but the rest is basically, see, it's weird about this one. The rest is I mean, then the rest is winning. So with the dollar Swiss was based on the weekly, where it was on an M3, didn't want to perform. Looking at it right now, basically causal positions. I don't know how I need to find. I'm going to talk to FXCM because all the calculation is not really, it's not correct. Because everything, if you put everything all together, it was the calculated one is 73 because two M1s and two M1s and one M3. It was 66 pips. It was 190 plus 30, 120, and there was 60. So there's a 66 altogether in terms of if you put it all, you combine all the trades together, all the three trades. So this is something as well that you guys can implement later once you're more comfortable, like M1, M2, M3. There's an M3 trade. Okay, great. I have an M1 trade. I know there's odds and probably I'm going to go long. I have an M3 over there. There's now an M1. And then there's another one to go along, and then an M1 and pow. Right? And then basically, the reason why I closed is after booster, doji, booster, doji, but overall, this is similar to what I was talking, like same with the pound dollar, right? Still in a downtrend. It's running out of steam. If I'm gonna wait this, then I won't make a profit. Pretty much either break even or basically a loss. So since I already made this two trades to compensate with that bigger trade right there, I want to close the position and basically come out with a profitable trade. So these are the things that basically you would be able to do too in your trades, combining all three different methods all in one go. 1, 2, and 3, 3, 1, 2, or whatnot. So you know, I want you guys to practice that as well, because like I said, they all come in hierarchy. We all know M1 is M1, buying at a wholesale price. M2 comes in next because it's either part of a reversal, continuation of the reversal, or a failure of the reversal to the downside, and M3 is mainly just picking just, you know, the end of the crop and just little pieces pretty much out of it. Right, so that's what we can do later on in the future too, that which actually you can do later on in the future. Okay, any questions?
No from me.
Nothing? Cool. Alrighty, then we have 2 minutes prior to the live trading. We'll see you in the next class, and we're gonna make Anthony actually you'll be the owner of this class or the next class, Anthony. So you can do whatever you want to do, and you can dictate whatever you want to do, what you want to learn. Sounds good?
Cool.
Sweet. Alright guys, we'll see you in the next class.
Right?
Yes, sir.
I'll see you in 30 minutes, mate. Got a quick meeting.
Okay, not a problem.
Cheers, mate. Bye.
See ya. Thanks.